Hello, I'm Juliet Foster, and a very warm welcome to MoneyLIVE Autumn Festival, the big catch-up. Now, over the past few weeks, the MoneyLIVE Autumn Festival has delivered a collection of digital episodes, networking opportunities, and of course, an in-person event in central London. We have heard from an incredible lineup of speakers sharing their insights on everything from open banking all the way through to payment innovation and of course, customer experience excellence. Well, today we're going to be streaming all the highlights from the big meetup that took place on the 17th of November. Now, whether you're part of our global audience tuning in for the first time, or indeed catching content from the stream you couldn't catch on the day, or re-watching the best bits, it's great to have you here. And of course, I guarantee you are in for a treat. Now, before we dive into a packed day of content, let's quickly recap some housekeeping matters. Congratulations if you're watching this, because you are on Grip, which is your online event platform where the networking and the content happens side by side. So this really is the final opportunity to connect with your fellow festival attendees in 2021. So while you're here, why not schedule a meeting? You can do this all from the website. You can check all the attendees and see who it is that's attending. Indeed, you can show interest if you want to reach out to them or if you want to book a meeting for that face-to-face chat. You can also have a look at who's interested in you and see who wants to connect with you. Of course, you can always turn a connection into a meeting. That choice is there. Then, of course, there's your recommendations. This is where you can check out the best matches that work for you. Remember, Grip is an AI-powered platform that does all the heavy lifting, so it frees you up to focus on what matters. And in terms of meetings, don't forget to check who has requested a meeting with you at the notification center, which you'll find in the top right-hand corner or at your personal schedule. Now, we've also scheduled a speed networking session that happens at midday. And these are a great opportunity, in fact, just to build new connections and at the same time continue that conversation, not just into 2022, but also beyond. Last but not least, find out more about our sponsors by visiting their hubs from the home page. A big thank you, in fact, a huge thank you to our wonderful sponsors, because it's you who made this event possible. We are really very grateful. So that's it from me. It has been an absolute delight sharing these insights with you over the past few weeks. We look forward to seeing you again at another event very soon.
Let's kick things off, because we're going to begin the day with a keynote speech which focuses on banking in a digital world. That's why we're all here, really, isn't it? And that speech will be given to you by Matt Hammerstein. Now, he's the CEO of Barclays UK, and he's going to be followed by an excellent lineup of speakers who are going to give their own insights into this topic, their own analysis. It's a big topic. There's so much happening. That's why we're all here. We want to find out where the next leg of the journey is going to take us. But before we join Matt, let's meet my BFF. You've met him already, in fact. This is Steve Thompson from FIS. It's good to see you. Yeah, I mean, I don't want to call you a pundit. Well, it's called many worse things. Okay, pundit, BFF, partner in crime, but we haven't done anything illegal. But look, the thing is, this landscape is changing all the time. Aren't you glad that you joined the bus at the right time?
It's a fantastic time to be in this business, right? I mean, at no time in my 40 years in financial services have we had the velocity of change, the frequency of innovation that we have right now. You know, buzz is the right word. You know, there's something new happening every day. You know, my mailbox, the newswires, they're bigger every day. And there are more new things in there, not just incremental change, genuine change that moves the proposition, the structure of the market, what we as consumers as well as professionals receive.
And it's important as well that, yes, all this change is happening, but we shouldn't forget that the customer is at the centre of it, and how much of this change is being driven by technology and how much of it is being driven by customers and what they want.
I think we, probably all the people in this room drive much of the technology change, and what we think the customer wants, well gauged or otherwise, ultimately, the customer's adoption, absorption, and retention of the things we produce drives the real market. We can produce as much cleverness as we like. If it's not adopted, if it's not retained by consumers, it will wither.
But that's the key thing as well. It's making sure that, yes, you are initiating change, but you're doing it for the right reasons rather than for the sake of change.
Absolutely. The changes we make need to be driven by demand. We observe demand, we observe causes, problems that need solving, and we drive towards producing solutions. And along the way, sometimes we introduce some wackiness, our personal spin, our personal bias, and that leads to more change.
Okay. I mean, look, before we go on to that keynote speech, could you very briefly give me an idea about the key points that you're hoping will be addressed in the discussions which will follow? We're going to be talking about this subject all day, so what is it that we should be looking out for?
For me, looking at the panel, right, lauded group, various backgrounds, it's that back to the future moment, or maybe the flip to the future moment, where we have that spark that says, that's going to fly, that will be the next big thing. And with lots of people in the room, the catalyst, this is fantastic. It's like being off the leash. There are 130, 140.
We are off the leash. We've been locked up for about 20 months.
Exactly. We've been hibernating or on Zoom, and now this is where the real interaction happens, live, face-to-face.
Yeah, and it's good to have this interaction because Zoom is great, but there are only so many Zoom conversations you can sustain in a year. But look, Steve, thank you so much for that. We are going to be returning to you throughout the course of the session because what I want to do now is to kick things off with our first keynote address. This is also my excuse to get up. I'm a bit of a fidget. I do like to move around. But we're going to kick off the day with Matt Hammerstein. Now, he is the CEO of Barclays UK. So the question which I'm going to put out there, but specifically addressed to you, Matt, and of course you're going to answer it, banking in a digital world, what is it? Where is it going? I'm going to back out. I'm going to take Steve with me because we're going to hand the floor over to you. But Matt Hammerstein, thank you so much for joining us. We appreciate your time. Thank you.
Good morning, everybody. It's a privilege to be here with you talking about such an important topic. Like you, I hope the irony is not lost on you that I'm here to talk about the digital world, and I'm standing in a room with hundreds of people that I don't know for the first time in nearly 2 years. And there's a really important point, I think, in the topic that I'm about to talk about that sits underneath that irony that I want to come back to later. Like so many walks of life, technology has turned banking up and down. You don't need me to tell you that, but it's worth just dwelling on it for a minute. The industry that I'm privileged to work in today looks utterly unrecognizable relative to the one that I joined as a customer many years ago when I opened my first bank account. And over the course of the last few decades, that relentless pace of change has started to reveal challenges that technology can help, but it can't solve on its own. And so I want to think about those really important moments, what I describe to my team as moments that matter. Those moments where you've got an issue, money worries and anxiety in life, where you need advice from somebody that you trust to help you figure out what the right path for you is. And who do you search for to be able to provide that advice to you? Think about that first time you traveled. How are you going to protect yourself when you traveled? The first home that you're going to go buy. Where do you go to get a mortgage to think about how to finance that house? Saving for retirement and the increased obligations that we all have to do that. And then, those unfortunate moments where you need to sort out the financial affairs of a loved one who's unfortunately passed away. Those are moments that matter, and they're deeply human moments where technology can help, but it can't necessarily solve the problem on its own. So let me come back to that. Technology, of course, is unrelenting. The pace of change is unrelenting. But there's a huge amount of progress that's already been made. So I just want to spend a minute before we talk about sort of where that's headed in the future about that progress, because I think it's worth bearing in mind just how much has already changed and the significance of it. Over the last 2 years in the UK, the use of contactless payments has gone up 60%, and the use of cash has gone down 30%. And both of those have sustained themselves even as lockdown has released and the economy has reopened. There may have been people in this room or somewhere in the world that forecast those types of changes over a long period of time, maybe a decade or more. I can guarantee you there was nobody that expected that to happen in 18 months. And it just goes to show that when the circumstances align and an exogenous factor forces people to change their behavior, it can happen really, really quickly. But the circumstances don't always align, and that exogenous factor doesn't always come along, and it means sometimes people are very reluctant to change their behavior. This morning, I suspect, like many of you, I came here via the tube. 4 years ago, I would have relied on an Oyster card. Itself, an incredible innovation in the form of payments relative to the way ticketing systems used to work. Today, I just wandered through the gate by waving my phone in front of it, and I didn't even have to hesitate. A more adventurous colleague of mine already has a chip embedded in her hand. She doesn't even have to carry her phone. So, the pace of change is unrelenting, and we've had an explosion of consumer options. I like to think about this as the liberation of finance. It's much easier to get access to finance around the world, and the competition is responding to that. Here in the UK, again, 10 years ago, Metro Bank entered the UK market. They were the first new bank in the UK in 100 years. In the 10 years since, there have been over 100 new entrants in the marketplace. We haven't even yet seen the impact of advanced data capabilities. Think about machine learning and artificial intelligence and how that's going to interact with, if you will, the digital capabilities that are now in place to create even more entrepreneurial attempts to liberate finance even more. And then there's the subject of digital currencies. I suspect we could spend all day talking about that. The practical reality is the reason we could spend all day is nobody yet knows exactly how that's going to influence how the world of finance is going to change. So it's really easy for me to understand why lots of people would sit back and say, okay, Matt, you work at a traditional bank. How in the world can traditional banks keep up with this pace of change? And I think that's a reasonable question. It's certainly one that I ask myself and my team a lot. But the reality is, even in traditional banks, there's been a tremendous amount of progress over the last few years. So this phone that I waved in front of the tube gate didn't exist 10 years ago. We didn't have a mobile banking application 10 years ago. So we've gone from a standing start 10 years ago with 0 customers to over 10 million digitally active customers on our mobile application today. And when I say digitally active, they're using it on average over 30 times a month, so once a day. I can tell you for certain, in our history, there was never a customer that on average used a branch once a day. If they did, we probably called social services. So it just demonstrates the pace of change. 80% of the things that customers want to do on their mobile application with a bank, they can now do in that digital application, 80%. That means over 20 years, it used to be that about 100% of the transactional activity that we did with customers happened in a branch. Today, that's nearer to 10%. And even within that 10%, 50% of what customers are doing is just cash. It's cash in and it's cash out. So there's been a tremendous amount of progress amongst banks, I think, as traditional players, but we've also started to think beyond, if you will, the realms of what we do today. Think about ways to pay. I've just recently completed a transaction online. I'm sure, like you get to the checkout. There's now 9 ways to pay. That's being enabled by, again, the liberation of finance. We're creating the new data highways of the future through open banking, soon to become open finance. And that's helping, if you will, create this liberation. The challenge, I think, for all of us is recognizing that, as I said earlier, this pace of change is unrelenting, and therefore, as much progress as we've made, we know there's a lot more challenge to come. And the nature of that challenge, to me, comes down to this dilemma. On the one hand, technologies can continue to enable us to have better tools and better capabilities for people to manage their money and make it work for them. On the other hand, we're going to find people increasingly unwilling, unable, or not have the confidence to actually be able to use those capabilities and tools to actually manage their money and make it work for them. And that's the fundamental dilemma that I think we're all now starting to come to terms with, is how in the world are we going to make sure that we get the balance in the way in which technology enables things and the way in which people actually use that technology across the spectrum of people that we at least are privileged to serve, so that they can continue to get the most of the advantage of those tools and capabilities for them individually. And that dilemma, I think, sits at the heart of how we think about using technology as we move forward. Now, For a bank like mine, that comes down to some really acute challenges. We ourselves, for all the reasons that I said earlier, we've made some great advances in using digital capabilities to serve customers better, so much so that if I look inside my organization today, we have a fundamentally different model for how we serve customers. 97% of what they would otherwise do with us in a branch, they can now do on a machine, and they don't necessarily need to use that branch. So we need to stop and think to ourselves, what was the purpose of that branch originally? But before I get to that, let me just spend a minute on a broader theme that I want to really lay as I think, the foundation of the conversation that you want to have today. And it's really about this balance between human capabilities and technical capabilities and how we make sure that people feel able to use them. For a bank like us, there's three things that stand out, I think, as we start to confront the challenge associated with that. One is the heartland of our relationship with our customers is now our mobile application. So we have to keep investing in making that mobile application as intuitive and as easy to use as possible, whilst at the same time incorporating the new capabilities that technology and data advance is going to allow us to embed within it. So just sticking, if you will, the capability in it isn't necessarily going to help. We've got to make it easy for people to be able to get access to it and use it. Two, we have to keep building people's digital skills and confidence. We're privileged to serve the breadth of society. We cannot make choices to only serve the digitally savvy and the digitally native people. We've got to make sure that we bring everybody with us on the journey. Three, we have to show up differently. So over the course of the last 6 years in the UK, 40% of the branches across banks and building societies have closed. That's not a surprise given everything that I described earlier in terms of how technology has enabled us to serve customers differently. But it does mean that communities are at risk of not having, if you will, the financial support available, and I don't mean in monetary terms, I mean in terms of advisory skills in the community to help those communities reinvent themselves. Because technology is not just hitting banks, it's hitting society broadly, and so those communities are having to reinvent themselves at the same time, and they need help and support and advice, not just at the individual level, but also at the community level, and banks have to figure out, as we close branches, how do we show back up into those communities to help, even without what was traditionally a branch. Now, we're privileged and proud. We have 25 of what we call Eagle Labs across the UK. We use those to try to find entrepreneurs who are also interested in using technology to help those communities reinvent themselves, connect them to capabilities that we have somewhere in the Barclays world or to other people that we know outside of the Barclays world, either in the community or beyond, to help put wind in the sails of those entrepreneurs and help them grow faster and renovate those communities even faster as well. But it takes the community to be able to want to do that. We can be there to help enable it. And again, technology is a friend, but it isn't going to solve the problem on its own. The biggest challenge that we face, though, I think in the industry at large, is the business model that we've relied on for the past few decades, if not the past few centuries, no longer works in this model. And the reason is we've got pressure from two different sides. On the one side, think about digital-only players. In the UK, Monzo, Starling, Atom, Revolut, TransferWise, etc. And on the other side, who are replicating the services that we provide in that digital-only context. And on the other side, you've got big tech players who are replicating the services we provide, but embedding them in the services they otherwise provide customers in an invisible way. Neither of them have the physical infrastructure that we have. Neither of them have the universal service obligation that we have. And neither of them have the cost and complexity that both of those bring into the business model that we run. So we have to find a way of trying to figure out how to evolve that business model to compete, if you will, against those two different extremes, but at the same time serve the community and customer needs that I just described wholly. The reason that's a challenge, I'm sure it's self-evident, but let me just bring it to life, is the risk we run is if we move too fast, we're going to alienate the people who have low digital self-confidence and capability. And if we move too slow, we're going to alienate the people who are really digitally savvy and want to get on with it. And against all of that, we're going to have to make sure that we continue to comply with our social obligation. And when I say that, it's worth just dwelling on it. Because if I talk about a bank's social obligation, I can imagine that for many of you, if not all of you, you immediately have an image in your head about what I'm talking about in terms of demographics or socioeconomics. One of the single biggest issues in the UK today is younger people. There's a huge social stigma with younger people in talking about money problems. They don't believe that they're able to do it. So in the surveys we do of Gen Z and millennials, is one way to characterize younger people, 40% of them would tell us that they have acute financial anxieties and money worries, and only 7% of them are actively seeking support for those. So I emphasize that because when we talk about vulnerable customers and we talk about social obligations, I'm not just talking about the socioeconomic or the demographic characteristic that I think most people talk about. I'm talking about all of us. Because the reality is, when we talk about vulnerable customers, if you take into account permanent vulnerabilities and temporary vulnerabilities, at any given moment in time, that's 1 in 2 people of banking age in the UK. 1 in 2. That means half of you in the room right now were vulnerable. You may not be willing to admit it, you may not even be willing to recognize it, but you need help in terms of managing your money and making sure that the stress and the anxiety that comes from that is reduced so that you can live your life to the fullest. That's the dilemma that we have to overcome. So let me try to bring to life the sort of balance that we try to bring to this and how the dilemma gives, how it manifests itself through 3 lenses. The first is physical access to banking. The second is how we attack fraud and scams. And then finally, how we provide advice. On physical access to banking, as I said earlier, why do we even have a branch? It's probably self-evident, but again, just worth saying out loud. It was for the exchange of paper, including notes, cash. It was for wet signatures. You had to sign documents to make them legally admissible. And for identification and verification. We had to eyeball people and make sure they were who they said they were. And you all know there's been huge advances because of technology in each of those. Think about taking a photo of a check and immediately depositing in your account. You don't have to go into the branch anymore. Think about the prevalence of e-signatures in your life. You don't have to sign documents anymore. My kids don't even know what a wet signature is. They've never signed anything. And then think about the advances on authentication that don't rely on eyeballing somebody to be able to prove who they are. We now have multi-factor ways in which to do that, and there'll be lots of conversation, I'm sure, here today about digital identification and how that can even make that a bigger advance. So as a consequence of that, as I said earlier, 97% of the things that someone would want to do in a branch beyond cash, they can now do through a machine. It's automated or it's digitized. The big question is, what do we do about cash? And some of that is about people changing behaviors and finding less convenient ways in which to handle their cash transactions, but there is an acute need. 25% of the people that visit our branches in any given day are dependent on cash. So even in the cash space, we need better technology and better alternatives to help them address those acute needs differently than necessarily coming into a bank branch. Now, I'm proud the industry has really taken hold of this issue. I'm a part of something called the Cash Action Group. You'll hear a lot more from that in the middle of December, so I don't want to steal their thunder. But we're helping try to create with the government, with regulators, the infrastructure, the governance, and the opportunity and the incentives to innovate in the space of cash in order to be able to help address these needs in different ways so that we can continue to liberate finance without leaving people behind. And a big part of that will be this concept of shared infrastructure. How do you have shared facilities where banks can work together to make sure that those needs get addressed? So second, attacking fraud and scams. The bank robber of the past showed up to try to break into a vault or held a gun to the head of somebody behind a counter in a branch. The bank robber of today is a virtual con artist. And this is a big and growing issue. The volume of scams in the UK in 2022 will be 66% higher in the second half of the year, even in the first half of the year. That's how fast this is accelerating. And it's not originating in the banking system. You all know that. We've all had the texts purporting to be from HMRC or Royal Mail or DPD or DHL. You've all, I'm sure, got a friend who's been duped on social media into creating a friend that turned out not to be a friend and eventually needed money. You've all seen the investment ad somewhere on the internet that has an offer that looks too good to be true, and the reality is it is too good to be true. It's in everybody's interest to figure out how to stop these crimes at source. It's in everyone's interest to stop these crimes at source. We're not going to be able to do that unless we get a lot better collaboration across the ecosystem, because the criminals right now are exploiting gaps between participants in the ecosystem. And so if every participant only solves for themselves, we'll never solve for the gaps that are allowing the criminals to exploit those gaps. Banks, of course, have to do more. We've got to use better data in better ways to spot unusual and atypical transactions and try to step in front of them. But I can tell you from practical experience, we typically see these crimes only at the very back end, after the individual has been duped, conned, or otherwise convinced that they're dealing with somebody who is legitimate and looking out for their best interests. Think of yourself, if your bank steps in at that point and tries to tell you what you should be doing with your money instead of what you otherwise want to do, how likely are you to agree with your bank and do what they're telling you to do? It's very, very difficult. So we need better collaboration. We need better work from banks, but we need better collaboration between banks, telcos, and tech companies in particular. And then finally, we need better coordination through the government, because this is often a lot like cat herding. I can tell you from practical experience. Not that I herd many cats, but I can imagine this is what it feels like. And then finally, provision of advice. There is a huge underserved need in the UK market for advice. Our estimates are that there are 6 million people today who have an acute need for financial advice but are not in active search of getting it, either because they don't think that it exists, they don't know where to go, or they think it's going to be too expensive to get. 6 million people today. That's the combined population of Birmingham, Sheffield, and Manchester, waiting for someone to help them with financial advice. So why is that market need not being met? The reality is every player in the industry is stuck between a rock and a hard place. The rock is this duty of care to customers, everything that I've been talking about, and the hard place is figuring out how to provide advice safely. Recognizing that in the modern world, particularly given where the regulatory, political, and reputation risks are, if you provide advice and it turns out to be wrong, you could be financially liable for it. So that's the problem. What are we going to do about it? Well, the regulators recognize this problem, and they've started to take action to try and address it. The FCA in particular, I applaud their recent intervention on consumer investments. They're actively advocating that firms now, if they have customers who have in excess of £10,000 of savings sat in a everyday savings account, to encourage them to put that into some form of investment that's appropriate to them given their risk appetite. That is a huge step forward for the regulator, but it's not enough. We need more, and it's going to take industry action to try to solve it. Digital makes this harder because people are more remote. So how do you build the trust to be able to give them the advice to help them down that curve? Again, technology can help with that, but we're going to need some way of helping reconnect with people to build the trust to encourage them to not sit still and wonder where to go get the financial advice, but actively go find it where they should be finding it. And the same thing with technology proliferation. I talked earlier about reaching a checkout in an online journey and had 9 different options to pay. Who has the time or the awareness to figure out which of those 9 is the right payment option for you as an individual in that particular set of circumstances? And I can tell you those choices matter in terms of things like payment protection. So depending on what you're buying, how you buy, you're either guaranteed that if it goes wrong, you can get your money back, or you're not. And many customers don't understand that, and even if they do understand it, they don't understand how it applies to the different payment options available to them. So even in the most transactional event where you're just simply paying for something, there are moments where you really need some form of advice to make sure that you're making a decision that's right for you. So how we solve that, I don't know what the precise answer is, but I do believe it's some combination of different physical access, better access to human empathy, and deeper trust. So in closing, what's the net from everything that I've said today? First, I think we should be excited and proud about the progress that's already been made. Technology has turned the industry upside down, but I think the industry has responded, on the whole, reasonably well to that. But we should be equally clear-eyed about the challenges that sit in front of us. Technology is going to continue to make it easier for us to help people manage their money better. It's going to give us better tools and better capabilities. But if we don't integrate and deploy that technology appropriately, we're going to run a really large risk of leaving people behind. And we just cannot do that just for the sake of putting great technology in place. The winners and the best banks of the future, in my mind, won't be digital only. There'll be banks or financial providers who find a way to make sure that they get that integration done correctly, leveraging the best of what machines do, which is routine transactions with a little bit of intelligence embedded in it, combined with what humans do uniquely well, which is empathy, trust, and connection. And I think that brings me full circle back to the point about the irony of being in the room today. Why are we in the room today? Because through communication and connection, we build rapport, we build trust, and we create an opportunity to have more open dialogues about the things that matter most to us, but we find difficult to talk to others about. And so we've got to find a way of layering that into, if you will, whatever that technology infrastructure we put in place. And I think the winners of the future in financial services are the people who are going to figure out how to do that best. And I can tell you with confidence, because it's my job, that's exactly what we're trying to do at Barclays. Thank you very much, and have a good day.
Matt, thank you so much.
You're watching the MoneyLIVE Autumn Festival, and we're about to kickstart with our first fireside chat. No actual logs, metaphorical logs to keep ourselves warm. But what's really going to warm us is the information, the responses we're going to get from our panel. Let me introduce them. I'm joined by Hetal, Popat and Chana. And what we're going to be looking at is the potential of open innovation. So before we tackle the theme, let's start with me sitting back and you, Hetal, introducing yourself to the audience by telling them what it is that you do and for whom.
Morning, Juliet. Thank you for having me. So, Hetal Popat, I'm the Open Banking Director for HSBC.
Excellent. And Cam?
Hi, likewise, thank you for having me. Hello, everyone. I'm Chana. I'm Global Head of Innovation for Temenos.
Let's start with a question for both of you. So I want to start first with you, Hetal, and then Cam, if you can give me your take on this. What does open innovation mean to you? What is it?
So ultimately, this is innovation between organisations, or between people from outside your own firm. So if I think about what I do today as my day job, we are building open banking standards and rules of engagement between firms, between fintechs and banks, working with the regulators, trying to design an ecosystem. And that requires you to step across all the different boundaries to make it work.
Okay, and Cam, your take.
And exactly as Hetal put it, it's sort of building that ecosystem. But beyond that, I would say it's really breaking down the boundaries between industry and society and community. And whether your market and the traditional target market is retail or commercial, it's bringing the humans into the conversation.
Okay then, so really an interconnected system, one that flows beautifully, it works well, from which everybody can benefit. Let's take that thought, because the bottom line is that this banking landscape, it has become more innovative and it's more open between the banks themselves and these third parties. So Hetal first and then Cam, why is that happening? And what are the types of innovations and partnerships that are arising out of that sense of interconnectedness, that aspiration?
Yeah, I think it's happening for a number of reasons. And Matt touched on some of this in his keynote at the start of the day. He gave the example of fraud, where there are cracks between the different participants, banks, telecom firms, other providers to customers, and the fraudsters exploit those cracks to then commit financial crime against all of us. The only way you can combat that then is by those different people working together to understand where are these cracks, how can we seal them and solve these problems together so that we can squeeze the criminals out of our society. Now that applies in fraud and app scams, but it applies equally to almost every other domain. Digital ledger technology is distributed ledger technology is an enormous force offering us significant opportunity, but it leaves many problems unsolved as at today. The only way to solve those is central banks working with the major institutions, working with innovators, working with end potential users to work out how can we solve the problems that we see in a trade journey, for example, or in a money transfer journey, together by all of us playing our different roles. And then what are those roles? How do we join up between us to make these policies and frameworks fit together? So that's where I think open innovation really solves some of these big problems. And if I think about the digital world we all live in, we use a little device in our pocket which goes through layer after layer after layer of technology, all the way back to data sets that are held in many, many other places. It's inherently open and connected, right? So you can only create new solutions like that by working together across that value chain.
And Cam, what's your take on that?
I totally agree with Hetal and also what Mark was saying earlier, and Steve as well as in his intro. The use cases are getting more and more complicated, and that's driven by the fact that customer expectations are changing, and they're changing fast. And they expect to have that Netflix or Airbnb type of experience with their bank, and they often don't. What that's resulted in is banks typically being that initial interface to the market, scrambling around to try and work out how do we actually serve this. And I myself have worked in banks and experienced this firsthand, that you don't have all the expertise you need and you can't build everything that quickly. So to move faster and create that expertise, you need to create that partnership ecosystem. And build where it's relevant, but buy in where it's necessary, but then also co-create. So it's not necessarily that you just go and buy 5 things off the shelf and hopefully they'll all plug and play. It's really curate the technology around what is it you're doing for your market, where is your data strategy right now, and how mature is it? What sort of culture are you running, and is your culture even ready to collaborate and co-innovate? And also bringing in, and this is the hardest part, is bringing in the regulatory story and bringing in compliance and bringing in legal and bringing in all the people who will have a say around data privacy and management, and making sure that any open innovation you do is done in a way that brings all of that together into a cohesive solution that works for the market, works for the bank, but then also works for the technology.
Okay, so that's the logic of a partnership, and let's focus on that for the moment, Hetal, because look, you are an experienced banker, and from your vantage point, what is it that makes a partnership successful or conversely unsuccessful? What are the magic ingredients to make it succeed?
Yeah, so if you think about partnerships, there's a significant entry cost to any partnership. You think about the security and cyber reviews that we do with a partner to make sure that they're safe to work with from our customer's point of view. You think about the process of legal contracting. It's fairly onerous, and it's the same applies to both sides in any partnership, or multiple parties if it's a more complex structure. So you really don't want to start a partnership and then have to back out or get halfway down a solution and then have to find a new partner. It's really very expensive and disruptive for everybody concerned. So at the outset, we find it's helpful to make sure you really have thought through what is the value case you're trying to create, what's the actual business model that you see and the outcome you're trying to deliver, not just initially, but further down the line. So you can make sure you choose a partner who can stay with you for that whole journey. Otherwise, you often find you choose based on criteria for today, and then a year down the line, as you start to think about what to do next with your product, oh, this partner can't quite do what we need. And that's a shame, and that introduces delays to any pipeline of development. And then the second thing that we find is absolutely critical is culture. Having the ability to work with a partner and having honest conversations about, well, this isn't good enough, that's not good enough, we need to do this more, we need to reprioritize and do this ahead of that. You know, those are all real-world conversations that everybody has to have. You need a culture which enables you to have those in an open and transparent way and agree on what you're going to do next, just as if they're a part of a department in your own organisation. And the good partnerships have that. Less effective partnerships you find often then reaching for their lawyers as soon as you get to these difficult conversations, and that's when the game's over. At that point, nobody's creating any value except perhaps the lawyers.
Yeah, they come out of the experience psychologically battered as well, I would imagine. But just listening to that, I mean, Cam, the sense I get as well is that, look, you need to know what your purpose is, your values. If you get that and find it reflected in the right partner, then at least there's a pretty good chance of that relationship succeeding. Is that the take that you have, given your vantage point?
Oh, Without a doubt. I mean, there's so many opportunities to bring partners into projects, and it always gets very exciting. But very quickly, if you don't have aligned values, for example, if you don't all come in and build a team around a can-do attitude, having that innovative mindset, being open to evolving the scope and letting the scope breathe and pivoting and doing all those things that are inherent in innovation, which you see in the startup world all the time. But in an ecosystem of partners working together, if you don't have that shared set of values, then the whole thing will fall apart very quickly. The other really important aspect of that is an openness in trust and agendas. You have to have transparent agendas. So I talk about the holy cows, the perceptions, the assumptions, the preconceived ideas of what the solution might be. Every partner will have them, but I always believe leave them at the door and then come in, and you are one team with an aligned vision and an aligned purpose around the humans that you're serving, the market, which means whether you're the bank, the vendor, the big tech or the small tech, it doesn't matter. You're all serving this market because at some point you'll all benefit from it.
So a question to both of you, because look, given what you've said, you're both overlapping, chiming each other, some really important lessons there for banks wanting to do these partnerships. What do they need to do to actually prepare themselves for the future of open innovation? Because it is happening and there's no time limit on it. There's no speed gauge. It's accelerating. So Hetal first, and then again, to get your perspective, Cam.
So I think primarily this is about people. You need to have people within your organisation, typically in an innovation type function, who are scanning the horizon, looking for where's the product and market going, what are the opportunities to improve our service offer for customers using the various mediums of customer communication we have, whether it's complaints data or survey data, or going out there and talking directly to customers in small groups. They also then need to be scanning the market for what's available. What are the different partners doing there? They should be in places like this, seeing what's happening in the market. They should have their finger on the pulse. And then they need to have, crucially, an alignment to what is the overall firm strategy. So how can these two things inform our evolving strategy and then start to stitch together propositions that you want to try and build out?
Okay. And the other point as well, which I think we need to follow on with that, Cam, and it's digital. Well, it's data, because we talk about partnerships, but we have to remember there is more information that is flowing in, whether we like it or not. How we use it, how we control it, implications there for everybody. But what does that do for strategies? How should these data strategies evolve if banks can actually seize the opportunities that it opens up?
It does open up access to a huge amount of data. It also creates challenges around ownership of data. And one of the things we evolved, so we're constantly evolving our innovation framework. It should never stand still. And one of the projects we ran recently, which is around SME banking, we actually mapped out the data flow across all the different partnerships and where the ownership sits and where the accountability sits and where the responsibility sits. So from a sharing the data story point of view, that's hugely important. Taking a step back from that and thinking about how do you realize business value, there's three key aspects I always talk to my clients about from realizing value out of data. One is make sure you understand its purpose. So again, what problem are you trying to solve for the customer, but also for the bank? Leaving technology aside at this point, whatever your data architecture is going to look like, it doesn't matter at this point. The second aspect is the context. You are serving humans in real life. They don't stop all day and sit on your app or your website and go, well, I'm going to do 3 hours of digital banking. They're running through life, dealing with mums and children and jobs and dog walkers and things breaking down. So what is the context within which you are using that data to provide value to your end user? And the third most important direction I would say for your data strategy is the direction of your data. Historically, and from a sort of legacy point of view, a lot of banks have always looked at data backwards. And I've been in the banking industry myself, equally guilty of doing this, which is let's look at all the data and see what we can learn from it. But that's historic. So we have to learn to look at data moving forward. So there's a beautiful Gartner model, which everyone should look at and evolve, which looks at describing data, what's going on, diagnosing data, why is that going on, but then predicting what could go on, and then prescribing what should go on. And what we've done using some of our technology, such as explainable artificial intelligence, is then start to open up the models and present them to our clients and say, right, now let's learn from you. You're the expert. You're the expert in your life. You're the expert in your business. You tell us what's going on in your world so that our models can learn from you, and then we evolve together. And we call that human AI augmentation, which sounds very buzzwordy, but it's actually really exciting because it's humanizing AI.
But I find that really interesting as well, just to take it out a bit further, Cam, because look, banks, they are collaborating amongst themselves, but that whole concept of collaboration, the way that the data is used, the way that it's analysed, detaching yourself from the methods of the past to look at the present, to project into the future. What is that going to do with the collaborations outside the traditional industries where banks have looked for partners?
It brings in the potential of bringing even more non-traditional banking data. So traditionally, this has all been about banking data. But more and more, this has enabled a strategy where you start to look at other streams of data. We're working with data aggregators who, like Kodat and Upswot and other data pipes, but also adding value, who are bringing in QuickBooks and Xero and bringing in all this data that traditionally banks wouldn't look at, like payroll data and marketing data and production data. But then even more than that, working with telcos to bring in proximity data. So now you've got all this, you're essentially starting to create a three-dimensional view of your customer in their life in a way that's relevant to the context that they're in. So what's really going on right now in this moment for this person that we can add some value to.
And that's interesting. You mentioned the customers. Hetal, let's focus on them, because I can see the benefits from a bank's point of view, because it means that they can actually draw up a better idea about who their customers are, meeting their needs, not just now, but also in the future. I can see what it's going to do to their business models. But at the end of the day, what are the benefits for the customer in this changing world of more data flowing through and open innovation? What do we get out of it?
So it's a great question, and I think you get something very, very clear out of it. Let me give you a specific example, because it brings it to life. There is now a service available built on open banking, but partnering with the accounting platforms as well, which offers a very tailored service to property businesses and landlords. So it mixes your bank data with your ledger data to help you manage a property estate and track all the various incoming and outgoings you've got across a portfolio of properties that you might be running, whether that's rent or service costs or otherwise. Now that's a very specific type of customer. The chance of any one major bank building a complete app solution for that one type of customer is pretty limited when you think about the number of other specialist industries there are in our economy. It's just not likely we'll ever get to that. However, somebody else has gone out and done that. The joy of open innovation is they've built something which uses existing standards, and therefore they can connect to HSBC and to all of our direct peers in the UK market, and therefore go to market with something which really helps those customers. And by helping them, I mean it takes out 2 to 3 hours a day of administration for them. That's real value being created and real efficiency in our overall economy being created through this end-to-end sort of open innovation. Now, if you imagine that across every other type of industry, because it applies to every industry, it applies to every type of different personal customer you have, because we're all different. So you have segment-specific solutions, suddenly you are really helping people in their day-to-day lives, whatever they're doing, administering a business, managing their personal finances, making long-term investment decisions, it doesn't matter. And that's where the value comes from.
You're nodding along in agreement there. Is there anything you want to add to that, Cam?
I think Hetal's just put it perfectly, and it's great that so many of us are looking at this space of how do you aggregate all the data that small businesses and individuals are having to collate themselves on a day-to-day basis, and apply value to it, and ultimately free up people's time to do what they love, which is live their lives or run their businesses and grow their businesses.
Which pals to your point about how the economy overall will benefit from that because of that new freedom, that openness. And let's stay with the idea of value, Cam, because how do you see open innovation actually impacting the current value proposition and also the banking strategy itself? I mean, do you think that there are products which may evolve out of that, and how transformative do you see them being?
I think banking in many ways will be unrecognizable in the next 5 years. It's changing already now, and there's a huge amount of expectation from consumers that it needs to be here, now, when I need it. More interestingly, I think it's going to deconstruct the traditional banking model of multiple business lines, which we've seen in all banks. This is how banks are organized, and therefore what happens is banks that are typically product-centric are pushing their product. So the product centricity of the traditional banking model will change. It will become more human-centric, and as a result, we'll see the organizations of banks sort of almost flipping over and becoming journey-focused rather than product-focused. So real human centricity is about who is your consumer, and then organizing your business around it. What that will create is the opportunity to create service ecosystems. So the bank may be at the center of a mortgage ecosystem. So the bank may own that relationship, they may even own the conversation, but they will bring in multiple parties to serve the entire ecosystem journey. When you think about the power that data can apply to that, so if you underpin that whole journey by data, the model will move very much from what has traditionally been a reactive journey, which is the consumer knows what's going on for them, and then they come to you when they have a need for a loan, to something that becomes ultimately more predicted and proactive. So the bank will be able to go to the consumer, we've noticed X, Y, Z, can we help you?
Interesting, and I love that expression, journey focus. I mean, does that resonate with you, Hetal, where you are on this journey?
I think it does, up to a point. I think you have to be very mindful of what are your core competencies as an organisation and as a firm. So I think if you, and Cam was talking about this, I think if you think about the way that we used to work, it was almost hub and spoke. You as an individual or you as a firm were at the centre, and you had a series of suppliers, of which your bank was one, and your estate agent might be another, and land registry might be another, if you think about a property journey. And your job was to coordinate each of them, and they wouldn't really talk to each other. Anyone who's bought a house will know that you end up having to do most of the work yourself, whatever the solicitor and your agent tell you. And you did sit in the middle and you coordinated each of these spokes. As we think about digital journeys now, more and more they talk to each other and work around you with you orchestrating it. And hopefully if we get things right as industry suppliers to customers and businesses, we make that work perfectly, where a customer sets up something that then fulfills. It doesn't always work. Bluetooth fails, Wi-Fi fails, these things will fail, we know that. But that's the vision. But within that, I think as a bank, we still have to know what we do and which bit of it we're good at, because that's the only way that you build a sustainable business that is actually profitable and therefore lasts. I think if you try and stretch into too many of these other components, the risk is that you end up doing them badly and not competing effectively in the market. That's not to say we mustn't play our part in that overall cycle, which is going to be spinning around a customer. We absolutely have to, but I think we'll be partnering with best of breed, trying to find ways to make sure that the end-to-end outcome is as good as it can be without us doing all the work. Just in the same way that a car company doesn't say I have to make my tyres and my brakes. You have to have a supply chain which works to deliver the overall product you need.
Let's get the final thought to close this out on, Cam, because look, we've heard so much. We've got a better understanding of what is going on in that ecosystem now and where it needs to be in the future. So given that, in your opinion, what is the one thing, or perhaps maybe two things, two key things that perhaps banks should be looking at right now if they're going to transform their value proposition? Because at the end of the day, this is a journey about structural change, but about relevance, making themselves relevant in a shifting world.
Yeah, you just hit the nail on the head there. It's all about the relevance, and I will give you two responses. My one response will be what not to do, and the other will be what to do. And again, I say this with great humility because I've been that person in the bank innovating. Stop following your competitors. That follow me strategy, whether you're a fintech or a bank or a vendor, it just doesn't work because the world is changing so quickly that as soon as you followed your competitors, you've fallen behind already. The real originality for innovating, but particularly open innovation, comes from being in touch with your market, being embedded in your market, bringing them into the conversation, bringing them to the table. And the reason why that's important is too often we sit in rooms where we start talking about the technology first. And technology is hugely important and hugely powerful, but if you apply it to the wrong use case, it delivers no value whatsoever. So we're very much focused on what are the right use cases. And I would say, be brave and reach out and look at what's happening in society. Matt talked about mental health this morning. 1 in 2 people struggling to understand their finances. That's 50% of the population. And we've looked at numbers and reports globally that says that's not just a UK situation, that's a global situation. I think the average literacy globally is around 50%. Half the population doesn't know what to do with their money. You've got growing middle classes in India and China and developing countries who suddenly don't have any historical understanding of how to manage money. So you have to reach beyond your traditional banking model and say, what is really going on out there? What kind of help do people need? What problems are they experiencing on a day-to-day basis? Get deep understanding and empathy of your customers' problems.
A sound piece of advice on which to end this discussion. But look, thank you both so much. We're really grateful for the time that you have put aside with us to be here today. Great advice, a journey that is never-ending, and I guess that you two will be key players in that. So thank you so much for those fantastic insights. A great way to really move the day along. So thank you.
Thank you.
Thank you.
Thank you. This is where we do another move because Steve, come and join us. Steve is our pundit. We're going to welcome you on. You've been sitting away in the shadows, but there's been a reason for that because, I mean, what's your take? Because again, there's so much there to disassemble, but what are the key things that stood out for you?
I think from both Matt and the segment here with Hetal and Cam, 2 things stand out for me. They are co-creation and they're the customer focus. So if we look at those 2, co-creation, I know when we use the word partner, sometimes it can be thought of as just 2 parties together. And reality, co-creation in the space of open banking to open finance means that we start with a small cluster of people of common mind with common goals, but what we create together is genuinely an openness that not just about that initial quorum, but about creating an environment, standards, methods, where other parties engage, come in, and these things keep going forwards. If we created an open, which is just a club, that will eventually die. As all these things do, because the new action will be somewhere else. The genuine openness of co-creation is what will keep this evolving and moving forwards.
Yeah, I mean, look, it's a very difficult ocean to navigate. And as Hetal pointed out as well, you have to accept the fact that you're going to have to work with other people. You need to choose your partner very, very carefully. But at the same time, you must never lose your sense of purpose and at the same time risk losing the trust of your customers. Once that's gone, given the volume of data that's coming through, particularly with these new strategies or new partners, then that's it. You just make yourself so vulnerable. You
do indeed. And I think purpose is a great word in there, right? That purposeful use of data, technology and tools to achieve a customer outcome. If you're business focused throughout on an outcome, you will achieve. If you're inwardly focused on, I think you used the word holy cows, the things we always did because we get precious about them, and I think everyone in the room is probably guilty of it to some extent, it's our comfort zone. If you put those aside and consider the other party, the customer outcome, you have great results.
But at the same time, if you go into so many collaborative partnerships, okay, where the bank has chosen who it's going with, who ultimately leads it? Because there's always going to be that danger, isn't there, that one person can say, hang on a minute, if I wasn't on board, you would never have been able to deliver this part of the sweet spot, okay? Somebody else can counter-argue to that. Who leads? Who has that privilege?
I think this is in the nature of collaboration. There will be egos, there will be those who set a lead, those who start by following, but it's consensus development. A standard doesn't emerge from one person saying, this is the way. Now everybody get aboard or get out. It comes from consensus building, working together, and evolving a common line of thought.
And learning to pivot as well, which is the point that Cam pointed out as well, because you can go into this one way, but the reality of the world says, well, hang on a minute, you may need to move another 2 degrees.
Yeah. We listen, we learn, we adjust our direction. And that's true collaboration. That generates openness.
Okay, look, we're going to break off there, but Steve, we are going to touch base with you a little bit later on. For those of you who've just joined us, you're watching the MoneyLIVE Autumn Festival. What we're going to do now is discuss how banks can triumph in the digital ecosystem. It is a huge topic, which is why I have some magnificent speakers standing by to help me navigate these very choppy waters. So before I introduce them, I'm going to take my seat. First up, Adnan Ahmed, it's very good to see you. This is where I sit back and you tell the audience what it is that you do and for whom.
Hi everyone, I'm Head of Strategy at Starling. I look after everything strategy and corporate finance related.
Wow, that was rapid.
It did say brief intro.
Well, yeah, I meant brief, but not that brief, but never mind. Look, the main thing is that we've got a good sense of what it is that you do for Starling Bank. Fantastic. James Bickerton, good to see you. Same thing.
Hi.
If you can actually tell the audience what it is that you do and for whom.
Hi there, James Bickerton. I'm actually listed as Director of Strategy and Analytics, but I've stepped up to a different remit now doing client development, so working with our frontline colleagues and how they interact with our clients.
Right, so you've been promoted, in other words.
Yeah, well, yeah, in a
Well,
sense.
congratulations. Look,
you.
don't be shy about your promotion. Congratulations.
Thank you.
Well done. Okay, now we've got another guest who's joining us. This is Charleen Sparks. She is joining us remotely. I can see me. Let me just be clear about this. That's fantastic. That's Charleen, okay? I am not Charleen. The reason why I've said this, Charleen, is because I popped up when I mentioned your name. But look, I'm going to hold off. So if you can actually introduce yourself to the audience by telling them what it is that you do and for whom, that would be great.
Absolutely, thank you. So I am Charleen Sparks, and I am the Senior Innovation Manager for Fintech and Partnerships at Lloyds Banking Group. So our team sits within innovation in group transformation, part of CTO, and we work across the business to unleash fintech opportunities and drive improved engagement.
Fantastic. And last, but by no means, certainly not least, Charlie. Do you like to be called Charlie or Charles?
Charlie's good. Thanks.
Charlie's good. Charlie McIver. Again, the same thing. If you can introduce yourself to the audience by telling them what it is that you do and for whom.
Yeah, thank you. Charlie McIver. I'm head of customer success for nCino in EMEA, so helping our customers with their digital transformations.
Okay, well, look, it's great to see all of you, and you've been extremely patient, and we appreciate that. We also appreciate the fact that you've taken time out of your very busy schedules to be here. So, look, what we want to do is to set the scene before we kick off this conversation, because clearly it's been an unusual few years for the banking sector. They've had to adapt numerous strategies to actually work towards the next normal. Much talk about the next normal and what it is. Some of us are still trying to work it out, but whatever it is, we are getting there. So Adnan, let's start first with you, because what are the key lessons that you feel banks actually learned from what happened last year, the spillover this year, and what are they going to take into 2022 and beyond?
It's a great question, and thank you. I think to start off with, the whole paradigm of how we work has changed, and I don't just mean when I say that, I don't just mean working from home or the new normal. I actually think that's an enabler. And ultimately, what I think particularly incumbent banks should take from this period is taking risks and actually doing stuff. And I think that can be pretty much scaled down to 4 points. The first being, like, you know, after you've moved from working from home, you have scalable teams. So teams that can rapidly come together to deliver a product, achieve an objective, and then disband. The second thing is having the processes in place to make rapid decisions. So now that everyone's working from home, you can't really have, and most people who've worked at big corporates, so now you have committees on committees going up to a steering committee before any decision's made, and it's 18 months, and by the time the decision is made, it's already dated, it's gone, you've missed the boat. At Starling, for example, we use a very, very slick method of doing that. So we use something called Slack to process approvals, get the 2 eyes, have audit trails. So when we release something, the approver just has to press a button, whether they approve or deny. They get to see the audit trail behind that. What are they actually approving? Who's seen it? What's going on? The third thing is, and it's just gone from me actually, is an intense focus on the customer. So I think to survive what's happened during COVID, you couldn't just release what you think was right. Actually, you had to focus on the customer. And listening to some of the other banks in the sessions prior to this, it was really, positive to hear banks talking about that focus on the customer, focus on what essentially the outcome for customers and what's the best for them. And finally, it's no, I've forgotten it again.
Do you know what? The key thing is that, just to whittle it down to the main points, there's a strong focus on the customer, a stronger, you use the word intense, but also cutting down the paper trail so that transactions are executed more swiftly. Great for the customer, great for you, it frees up your time. Charlie, is that something that you notice from your experience? Are these the key lessons that you're likely to take forward into the new beyond?
Yeah, I'd agree with everything Adnan said there, but I think the biggest lesson for the banks is you can't stand still, and you've got to have the right underpinnings to deliver on this. And it's not just about digital transaction capabilities. If you heard Matt earlier, it's I need to start a transaction here and finish it here. They might be totally different delivery technologies and channels, and as we heard from Matt as well, you've got to be able to give advice in that process too. So it's all about having the right underpinnings, the right capabilities across channels, and being able to be agile with those as we have to react to new scenarios.
Which makes sense, because we know banks have to keep on innovating, breaking boundaries, and also trialling new ideas, because the key thing is relevant. They have to remain relevant in today's changing world, also meeting the needs of customers. It would be unfair to say that we ourselves don't know what we want. Of course we know what we want. It's how it's delivered. Okay, don't forget that trust has to get baked into that. We've got new players who are entering the market all the time. Those customer expectations, as I said, constantly changing, and banks not only have to keep abreast of that, but also stay ahead of the curve. So given that, Charleen, how do you see the role of banks actually changing in this landscape? Because the survivors are the ones who presumably can read it very well with crystal ball clarity.
Absolutely. So at Lloyds Banking Group, we have a strong focus on purpose. So in line with our purpose of helping Britain prosper, our current emphasis, given the impact of the pandemic, is really to help Britain recover. And so while our activities, products and services, they change with this evolving landscape, our role within LBG is really to remain the same in terms of our purpose. In terms of that digital landscape, I guess there's 3 key areas where we expect to see banks respond, and they'll be around, firstly, digital identity. So this is a significant enabler for improving the customer experience and being able to securely and seamlessly onboard customers and remove barriers, not only for them to access, but also to use and manage their financial services. Secondly, ecosystems, really unlocking new value streams for banks and for new entrants and fintechs. And the third is digital currencies. So adopting this new technology can really take bank into that next generation of efficiency and innovation. But I think ultimately banks should be using the tech stacks to make it easier for that end customer to do business and to manage their finances.
And Charlie, let's take a moment just to discuss the impact of the challenger banks, because they really have disrupted that landscape. So how do you think incumbent banks can successfully compete in this digital arena when you've got these new guys coming in? They appear to be offering more than what traditional banks are seen to offer. What needs to change from your end if you're to say, well, hang on a minute, don't ignore us, we're equally valid?
Yeah. So I think there's two really fascinating things with the challenger banks. The first is they grew up without having a massive pile of data sat around. They had to go get that from elsewhere, and they had to build plumbing that could do that on the fly. And I think that's a really important element. Second part is they're just all in one place, and they've got no legacy. So business and tech sit together. They define processes that work for customers, and they move on. Now, neither of those, big banks have challenges bringing their data together, but they got piles of data. And so they've got to get the plumbing right to bring that into business processes. And I think the second part of that is, big banks are hugely siloed in how people collaborate. And you heard Adnan here talking about using Slack as a collaboration tool. That's pretty on the forefront for banks, of bringing the people together to develop processes and use the tech that works for customers.
And James, come into the conversation, because off the back of what you've been hearing, looking at business strategy, should they be diversifying further, or is one strategy to perhaps go niche, focus on what you do best, where you have the head start, or perhaps think outside the box and do something entirely different, unexpected, as we say in the news business, sexy?
So I think my crystal ball doesn't work right now. So I think we are exploring all options, and we're lucky the scale of HSBC means that we can afford to essentially have a few horses in the race. We're exploring the sexy end then, let's say. We recently announced our partnership with Oracle, NetSuite, and the launch of our banking as a service proposition, which is pretty cutting edge. But that's the real far end of complexity and cutting edge kind of client embedded finance solutions. But throughout the rest of the organization, I think we have to continue to explore other options. I think so I talk from a kind of multinational corporate end of the book, not the retail or consumer end, and it's a bit of a different innovation play up there. And I think challenger banks are starting to creep with their innovation up the curve, up to where our client base, and it's a bit of a race of the agility of a challenger bank and their ability to become global, to expand their markets, to deal with regulation and capital regimes and that kind of stuff, versus our incumbent global nature, the firepower we have on our ability to increase our pace of change, and which one of those is going to trade off. It will be a very interesting race to watch.
Absolutely. And on the subject of that, Charleen, look, what are the new business models that have the most potential for banks going forward? Is it the marketplace model, or should it be banking as a service? Because, I guess on the one hand, you want the innovation, but at the same time, you still have to stress that this idea that banks are the best bet, they're as safe as houses, that's the place to put the money.
Yes, absolutely. We are operating in a highly competitive market. We've got historical low interest rates, competition that's supported by change in regulation, and ongoing shifts in customer behaviours. As a result, it's a challenging environment, but technology is really enabling new types of connectivity across the ecosystem. So inevitably, many industry participants, they're exploring these new business models with some examples live. As to whether it's a safe bet, I think banks really have to consider sort of the strengths and the capabilities they have today, and how these can make a difference in these newer models. They also have to consider the gaps relative to their current capabilities, for example, ecosystem orchestration.
Hello. We thought we'd lost you there. Are you there?
Yes, I'm here. Can you hear me?
Yeah, we can hear you. You suddenly dropped out of a sentence. But is there anything else you want to add, or can I move the discussion along? I think I'll try.
Just one third thing. I guess by nature there is sheer complexity, I think, within our industry, and I think there is a role for banks to play as part of this evolution, to really be transparent, build trust with their customers, and to educate customers. I think it's more important than ever.
Okay, then, thank you so much for that. Don't go away. But look, Adnan, whenever you look at this landscape, it tends to spawn an alternative vocabulary. I've come across this word co-opetition. Somewhere along the line, the M got dropped. But look, what we're talking about here is the cooperation between competing companies. So is that the way forward for driving a new level of digital innovation?
Sure. Co-opetition sounds like a synonym for ecosystems for me, but...
You're confusing me now.
But, you know, everyone talks about ecosystems and talk about, you know, creating a place for customers where banks can serve all their needs. I actually don't think that's a right approach. I think an ecosystem is helpful, but banks shouldn't be providing end-to-end services. Someone in a previous talk talked about owning the entire mortgage process. Banks already incumbent banks in particular, are already very large, and they're already very slow. So dealing with something that they're not experts in makes them slower, makes it harder for them to do that. I think with, and also looking at how the fintechs have broken into the mold, right? Some of those fintechs that have been around for 10 years have focused on one product and one product only. You know, I'm talking about people like Zopa and Funding Circle, where they've done a single unsecured lending product and they're very good at it. And just before I go into more about what Starling's doing and my view on the whole co-opetition and working and creating this ecosystem, I think Stripe is a great example, right? Stripe famously said, or the CEO famously said, I don't know who my customers are going to be. But what they did is they created the infrastructure and the plumbing to reduce barriers of entry, and actually not reduce, remove barriers of entry, to allow new customers to engage with their product. Obviously, this is more in the e-commerce space, but have that crop up and ultimately increase competition, provide a better outcome for customers, and more choice, which can never be bad, right? For Starling, we've done something that I think the incumbent banks struggle, and I think a lot of fintechs are trying to do the same thing, is that all our microservices, whether it's payments, whether it's the cards, whether it's an account, can all be accessed via APIs. We can package that up and license that to third parties. Again, what we're doing is we've removed the barriers of entry there. So there will be people who are going to be innovative, thinking about how can we actually use this? And everyone's heard about embedded finance. How can we embed finance in our customer journeys? The main thing is we look after the regulatory requirements. We look after all the tech side of it. We've all seen the stories with, you know, large consumer brands that have a non-core bank offering, and it hasn't worked out because it's too expensive. They don't know what to do with it. And that's where people, you know, in the BaaS space, people like us, come in and we take that headache away, but they still get to own that customer journey through the embedded finance, whether it's payments or buy now, pay later, and so on.
Okay. Please.
No, good. And finally, I think I want to say, and I think this is probably actually your follow-up question. I was going to talk about a case study, but I'll let you ask the question.
No, well, you've done it for me, so please give me my case study.
So we have quite a few, but the one I want to focus on most is Standard Chartered. So we've got a new deal with them where we are essentially doing all the plumbing from a regulatory side. So they're offering an ESG product. And Starling looks after the regulatory reporting. We provide the FSCS compliant accounts. And what that's done is, for Standard Chartered to do that by themselves, that would have been expensive. That would have cost them a lot of money. It would have taken them months to build it from scratch. We've allowed them to come to market quicker. And more importantly, we've allowed them to address changing customer demand. I think there was a recent survey, more than a fifth of domestic investors want to invest in green products. They're conscious about their investment decisions. Standard Chartered saw that. They saw that as an entryway into the market, and we've essentially powered them to get here quicker and, you know, capitalize on market sentiment and get there as a first mover.
Okay, look, thank you so much for that. We're going to break off just very briefly, just to remind the audience that there will be the opportunity to actually ask some questions. Remember, I said I would flag it up when those spots arise. So it's a very brief window. It's a few minutes, but it doesn't matter. Towards the end of this discussion, if there are any questions you want to put to members of the panel, please do feel free to do that. But let's press on as well, because I want to focus on the customer, because, look, fundamentally, they're key to what you all do. This is one of the reasons why we're here, to talk about that relationship, etc. So, Charleen, I want your take on this, because, look, how do you think it is that banks can actually continue to meet the changing expectations of their customers? What is it you think that we really want?
Absolutely. I couldn't agree more with that statement in terms of the reason we're all here is because of that customer. And for me, it has to all begin with learning about what those customer expectations are. So we use customer research and observation techniques to really understand what customers need and how we can help them achieve their life goals, especially in today's changing environment. We leverage different data and unique insight capability to really listen to ongoing customer feedback via various channels and platforms. And we use agile and service design as an approach to product development to ensure that we are designing, we're building, and we're testing new concepts that evolve based on the feedback of the voice of the customer. So technology is really giving banks the power to be creative and to adapt, so they can be relevant to the customer, their life stage and their goal. But I strongly believe that the customer journey and that customer goal cannot be an afterthought. It needs to be embedded, into the tech roadmap, to the implementation, so that we can deliver personalized propositions. So really you need to have a clear vision for the future and start with the end in mind.
Right, and Charlie, to do that, does that mean it's really a case of adapting and responding at speed? Now, if you're to tick all those boxes in the way that the average Joe on the street like me is going to feel really happy, how are you going to do that? Because doesn't that take the concept of agility to a completely different level?
It does. So for me, the only way you achieve that is by having the right platform in order to do that. It's a platform play. Ecosystem was another word that got used. At nCino, we believe that is about having your users, your customers, the bank users, all in one platform with data and processes in a platform where you can bring in those parties. So we're not talking about technology integration anymore. We're talking about functional integration. How do I do that KYC functionality? How do I bring in a company's accounts and rate those on the fly, regardless of where they're from? That platform play gives you the foundation to build on. Then you start to bring in real-time analytics, start to drive execution from strategy. So what's the bank want the lending book to look like? And now we're doing the same with off the back of COP26 with the environmental aspects of our lending portfolio too. So for me, it's the platform play that gives you the foundations to do all of those things that you want to do for customers.
And James, come into the conversation because, look, it's an extraordinary digital environment in which you are forced to operate. But what does this do for the bank of tomorrow? Could you see the bank of tomorrow, for example, following the trail of social media by looking beyond traditional engagement channels, perhaps forging alliances which once upon a time seemed unthinkable?
Absolutely. I think the point around platform play is quite interesting because, we have our own platforms, but now banks are exploring, embedding our services in our clients' platforms to reach their clients and then to reach their clients. So,
which makes sense, logically.
Yeah, you go a bit down a bit of a rabbit hole to kind of learn about, you talked about the customer's needs. It depends on which level you're thinking about. Is it your client? Is it their client? Is it then the consumers at the end of those products? So we're exploring how you can see right through that kind of lens. And then, there's different options, a bit of an a la carte menu between, take my platform, we'll embed to your platform, creating, and again, it's an ecosystem to use the buzzword, but it's fascinating seeing all these different kind of configurations come to life, and actually just means that we can feel very customized to the client's needs, meet your needs, meet your strategy, because we come up with all these different platforms and capabilities. Now but we always talk about the tech. I think the piece that's really fascinating to me is that then needs innovation through the rest of the model, right? So you've got to have the right legal and liability frameworks, risk management, financial crime management, everything else that we do as an incumbent bank. We have to bring the whole organization along to innovate with that. Otherwise, we'll never get there because, we're slow. We're slow because there's such scale and so many complexities we have to go through, but you need those complexities in order to operate a safe system that people want to engage with.
Yeah, and what's your take on that, Adnan? Because it seems perfectly logical from my point of view as the outsider looking in. Go in with your customers' platforms, you can grow your base from there. And why not? Because, these guys, they've done all the legwork, they've got the compliance teams, they know how it works.
Yeah, I think that's a logical approach to the market. I talked about earlier about
enabling and removing barriers to entry and actually getting people to use the platform. And someone else, as you say, has done all the legwork, has done looks after the technology and the regulatory reporting, and they can leverage your platform to build whatever they want on top of it. Because the key thing here, using another buzzword, is APIs, right? The whole open banking standard, and there's a discussion whether that's successful or not, but one for another time. It allows people to just easily, integrate, pull data, move it around and actually do what they want to do with it. And ultimately, you're delivering the best customer outcomes.
Okay, then, well, look, what we're going to do is break off, because you guys can rest your vocals for a bit, because what I'm going to do now is throw this open to the audience. We do have one of those wonderful windows which opens up, so if you want to put your questions to the panel, you can do so. That's why you need to put down the app or upload the app, I'm sure which many of you have done already. So I'm now going to switch over to my screen, and just to give the panel a heads up as well, we don't do hesitation. So I'm going to put some questions out there. Whoever's over it like a rash, that's great. Everybody join in. Any hesitation, I choose. Yeah? It's only fair to let you know. It's called being democratic. Okay, let's go for this now. How should the bank of tomorrow be approaching sustainability and the need for banks to face this head on? Good question coming out of the COP26 as well.
Yeah. I think banks have got to start. There's now data providers out there that give you all the data on a company and an environmental profile. We've got to get that into environmental rating systems in companies, in banks, and start to decide what do we want the book to look like. We're ready to go.
I think it's even bigger than that, though. For us to really solve the ESG dilemma, or however you want to phrase it, it's our global economy needs to transition, right? And so that's where the incumbent banks or the larger banks or the SIFIs, whatever you want to call us, have the advantage. And we've committed to $750 billion to $1 trillion worth of investment into supporting organizations on that transition. I don't think you're going to get that from a startup bank, no offense. And so,
don't worry, you will be able to answer that. Just let me finish.
You've got to turn to the big institutions and put the spotlight on us to stick to those commitments and to support organizations in that transition.
I'd love to get your take on that. No, the big guys can do it better than you.
I think I'm going to be diplomatic in my response here, but ultimately we don't have to worry. Well, we do have to worry about it, but because we're new, we don't have all these legacy problems. So we've come out and we've said, actually, we can offset we're going to offset our carbon emissions annually from now on and get to net zero within the next couple of years. But ultimately, because we've started from a clean slate, as it were, and because of the way we work with incremental releases and we iterate, it's easy for us to respond to those changing dynamics, and it always will be. We don't have to invest billions of pounds into doing something when we can invest a couple of million and do the same thing.
You're trying not to look smug, but you are.
Well, there's a difference between your own commitment to net zero, so versus helping your clients transition. And I think the point I was making around, we need to help our clients on their journeys, not just focus on our own goals, which are equally as important and will require investment, but it's helping the economy move.
Yeah. Okay. Sorry, did you want to add to that before I try to bring Charleen in just to get her take on that question?
No, let's listen to Charleen.
Okay, Charleen, would you like to respond to that question as well? The bank of tomorrow, how should it be approaching sustainability and the need for banks to face this head on?
Absolutely. So Charlie Nunn, our CEO, he was at COP26 and he was very vocal, and he said that the right partnerships, prioritization and pace will really help us play our part in financing a green future together. So for me particularly in my role in Lloyds Banking Group around partnerships, there's a real opportunity for us to work together across the industry to really use technology to really focus on this in hand together.
Okay, then, thank you so much for that. Okay, so let's move on to another question. I mean, look, we were looking at the bank of tomorrow in the question you guys have just addressed, and they were focusing on sustainability. Again, a reference here to building the bank of tomorrow. What things are essential to be able to build that bank of the future? Okay, we know the sustainability is part of it, but what are the other components? So again, I'm throwing it out there. No hesitation, please.
very close to my heart, collaboration and partnerships. For me, there's a real opportunity here for them to create new value streams and really put the customer need at the centre, so we can give them broader suites of products and services to help them manage their financial lives. But for banks, these models, they're allowing new competitive advantages through income revenue diversification and new growth opportunities.
Okay, then. So
one thing that's really interesting, because people talk about ESG as the acronym, but the focus on climate and environment has been phenomenal, right? And I think there is a lot of great commitments and energy that came out of COP26, very climate focused. But if you think about the S and the G, actually one of the areas that we're really heavily focused on now that we've got our climate kind of plans and everything in motion is the S. And so for some of the bigger corporations out there looking at their supply chains and understanding where there's, underage labor and challenges around the resilience of those supply chains is a key topic. And so now we're heavily investing in the capability to provide transparency there, because what they really struggle to see is, okay, well, who is in my supply chain? What is the actual, where's the risk? Where's the resiliency? Where's the fragility? With post-COVID as well, with, what happened with like the return to local supply chains and inward movement, that's a key topic, and I don't think we give it as much attention as sometimes we do with the climate lens as well. And it's all part of the broader agenda.
Okay, any further responses? Because I want to plough on for a few more questions before I say goodbye to you all.
Really quick one. I think one of the most fascinating things is, we heard about the lack of legacy in the challenger banks, but we heard Matt this morning talking about your social obligation in the country and the need to multi-channel and customers of different abilities. What those two polar views say is, for everyone to scale, we've got to land somewhere in the middle of all of that. Banks have got to find, startup banks have got to look further than just the digital transaction capabilities, and the big banks have got to transform with platforms that can help them be more agile. And the truth is going to be in the middle of those two, I think.
Find the middle and you will be wise. Okay, a question for you, Adnan. I had nothing to do with it, but here it is. This is on the case study around Standard Chartered and Starling. Were customers aware of the product being provided by Starling instead of SC Standard Chartered? If so, was there any impact on trust? I think it's a very interesting case study. It's also a very interesting question, Adnan.
Yeah, I think it's powered by Starling. I think this is a platform, and we talked about ESG here in the last couple of questions as well. And I think in order to help our clients and businesses actually make the right decision, for us, it's all about the plumbing and creating the platform for that innovation. I think the customer trust element here is they're seeing banks, and particularly larger banks, trying to move in the right direction and address their concerns. And by them being agile and considering things they would never have considered before, this is a type of partnership where most banks are like, oh, we'll just go in and do it ourselves, or we'll enter the country and everything will be in our brand because it's important to own the heart and minds of the customer. I think what we've done with Standard Chartered is we provided that platform, and I think where it comes to customer trust, I think the impression of it is that it's moving in the right direction and they're doing it in a cost-effective way, which allows them to offer this service in the first place.
Okay, we've got about 1 minute left, so if I could have a brief response from all of you to this question. Public cloud for banking services, is there a future for it? Charleen, if I can start first with you, then I'll move it to the rest of the panel very briefly.
So absolutely, it goes back to ultimately serving customers, anytime, anywhere, and having the enablers, the technology enablers in place to develop those next generation customer propositions.
Okay, and Charlie.
Yes, nCino is a company with 1,400 banking customers around the world in the public cloud. The answer to that is yes.
Yes, and James.
Absolutely, we use it already in multiple different parts of our business, and it's a massive enabler to agility, so absolutely.
Yeah, I mean, same theme here. Everything's in the cloud. We were built in the cloud, and it allowed us to respond to the crises in the way that we have.
I love the way how you all managed to elaborate on the word "yeah." That's really impressive. Thank you so much for that. But look, that's all we've got time for on this panel discussion. You've been absolutely brilliant. You've also got wonderful senses of humour and reserves of patience, endless reserves of patience. So I know that we had these ongoing microphone problems, but you all handled them beautifully. Thank you so much for that. Thank you.
Thank you.
Thank you.
Okay, so this is where we bring in Steve, our pundit, my BFF.
Not lurking.
Not lurking, no. I do find it a bit disconcerting when I see you over there in the corner, actually. But look, I mean, so many things coming out. I just love the way that this has really progressed, that we had that opening speech from Matt, then we had our first fireside chat, now here we are.
Yeah, you see some threads run through this. You know, they steer left and right, but there are some threads right through the middle of this.
Yeah. What are the key threads? Go through them with me.
For me, yeah, we heard one of them, several different words, you know, platform,
Plumbing.
BaaS, plumbing, yeah, ecosystem, not quite synonyms, but all overlapping to what I see as a marketplace. Yeah, what we're talking about is a multimodal marketplace. You know, we have multiple manufacturers of services or products. We have multiple distributors of service or product, and they're all working together with aggregators potentially between them to arrive at something that delivers to a group of consumers a type of consumer. You know, openness is what threads between all of those and enables those to work together. You know, you see it, Starling, manufacturer in one particular case, right, to a consumer who is providing a service to another consumer. You know, we spoke earlier, banking as a service comes out of this for me. You know, I think if you follow the press in our business, narrow press, but we read it avidly, in the last 6 weeks I've seen 7 banking as a service providers pop up. You know, Volt in Australia, the start of this week with their latest release. You just added an 8th for me. Next week you're going to make an announcement. You know, these providing services that are pluggable, that are available and can be consumed by someone who's manufacturing a different product on top of that.
And this is the point, because certainly at the beginning, one of the things which I tried to raise in my intro was banks defining what it is they need to be. Now, once upon a time, perhaps the answer seemed elusive, but I get the sense that they're pretty clear. Even if there isn't one word that encapsulates it, they know what their new normal is.
I think you're right, and Cam touched it earlier. Right? I think the days of every bank being a large institution that tries to do everything every other bank did are passing. And we're sort of seeing a maturity in some of the lines of business in banks, or in some cases in the whole bank, to have a very specific purpose. Yeah, that might be we manufacture a type of account that we make available to others, as well as also happening to be a distributor for it in some markets to some types of customers. Yeah, I think it's a type of specialization. Yeah, focus on what you're good at.
Okay then, look, some sound advice there. Focus on what you're good at, and I guess there is that luxury as well that because this ecosystem is expanding, there are lots of things for you to choose from. And of course, forging these partnerships, choosing the right kind of partnerships, however you do it, it could be embedding yourself on somebody's platform, as long as it works and you don't lose the trust of your consumers, the customers, at the end of the day, because you know you've sussed this out, you're doing it well, and good luck for the rest of your journey. But that is where we're going to have to leave things for the moment. But also, Steve, thank you so much for being a fantastic pundit, a BFF.
I'll give you some racing tips later. But
yeah, we'll share the racing tips a bit later, and they better be good this time around because you owe me after our last disaster. But look, thank you so much for that. And I have a feeling as well that we'll be teaming up at some point in the future. But thank you. You've been absolutely wonderful.
Thank you. Thanks to our panelists who gave great input.
I believe in sharing the love. So our panelists here, they deserve the love because you've taken us on this journey. You've shown us what lies ahead and what it is that you're doing to make that future more comfortable for all of us. So thank you. Come on, applaud yourselves. You deserve it. Don't be shy.